Okay, good morning, everyone. It's 11:24. Today's date is the 13th day of October 2023, and you're speaking to Vision X. I'll make this brief. Today, I'll be talking about my trade and my entry setup on EURAUD and what I can see. And you know what we do at Vision X? We always look for what's it called? A plus setups to trend. What's it called? To swing trade actually. So what I'm trying to do, I've done a rough analysis on my phone, but it was not clear. So I thought about coming back to the PC to get this out to the community, to my community. Are you getting me? So that we can analyze together and take some trade. And I don't care whatever it's this setup or this asset. Wherever I see a confirmation, an A plus confirmation, I tend to swing. I'm a swing trader. I tend to swing those confirmations. Are you getting it to my knowledge? So first of all, to the asset we're looking at today is EURAUD, and we're at a very critical level. So I thought about bringing it to your attention. So what do we do at Vision X? Well, first of all, refresh our memory by, even though we have analysis intact, going back to the monthly time frame to see what is happening. And on the monthly time frame is where you can get a EURAUD is actually in an uptrend on the the daily time frame, the monthly time frame with us, with the last high we had at at this level. So where are we right now? We have to drop down, probably check our RSI. Our RSI relative strength index, the buying momentum, it's is above 50, which is a good sign for me that this trade I can still enter into it. Are you getting it? We started buying all the way from 1.4300, as in, I think, in the month of since November. I think November, is it October, November 2022, and we've been trading this perfectly, and it has been trending perfectly with our strategy here at Vision X. So I'll be dropping down to the weekly time frame to see our major support and resistance zones and what we have done in this chart since the month of October 2022, and how we'll be trending it perfectly well. In case we're not getting, we're in some trades on we're in some trades on gold, UAUD. I think we still have some little trade inside USD and GPUSD. Yes, let's go. And trying to refresh this. Just hold on. I don't know why it's stalling. So we need to get this out perfectly well to the community and be able to also help the YouTube community algorithm and the YouTube community also to give them trades like this. So today is Friday. We don't trade on Friday. That was why I was out today. We don't trade on Friday. That was why I was out today. So where are we right now? I'm looking at EURAUD. So leaving the XY. This is a dollar index. Dollar index is trending perfectly well. I guess if you know what you're doing, you should know what is happening on the dollar right now. But today we're trading EURAUD. So let me go back to the EURAUD. Where are you? Oh, sorry. Let me go back to the EURAUD assets. So this is where we are on EURAUD, and we're a very, very, very sweet level on EURAUD right now. Okay. On the daily, okay, I can use the daily to trend this. On the daily, if you can remember, if you know how to trend your markets perfectly well and find out what's going on and what's happening, you can see that the market has been in an uptrend on the daily. Are you getting it? In a perfect, EURAUD has been perfect. That's why I'm even trading it, because it's even fitting well into my important areas of value, my major support and resistance, and it's even fitting into my, It's even fitting into my, it's even fitting into my Fibonacci tools, and all my confluences are coming out very well. So on EURAUD in the month of March 2022, we got this bottom, and we got another bottom in August 2022, which gave us a low bottom. And we did let me just recap. We did a break of structure back to the upside. Sorry, change of character back to the upside with that. Then we did a 0.38. Remember what we do whenever I'm getting this kind of setups, it goes well with me, and I tend to look at those markets. And we did is just a 0.38 to retracement levels Are you getting it? To these before getting to this previous high. Whenever we do 0.38, what happens according to our strategy here, we look for an extension back to 0.786. So I think we took this trade in the month of January 2023. That's why I've been talking about EURAUD since January. Go and check all my YouTube analysis. So we took this trade and we ended at 0.786 because the market was get to 0.786 with a very, very good, ABC move, to the upside. So after doing that ABC move to the upside, if it's really going to complete an Elliott wave 1, 2, 3, 4, 5, you are going to know, are you getting it, by whatever it's going to do on the next leg. And on this next leg right now, what did they do? Did they 1, 2, 3, 4, 5? Are you getting it, to the upside Elliott wave? So it's supposed to do a correction back to the downside before continue this market to the upside. But that's why I'm even doing a recap what's happening here. So it might not be an Elliott wave, you might just want to continue doing what? Trending to the upside until it finds any particular major resistance. And all this resistance we have here is about 9,800 from where we are right now, is about I think roughly 3,200 pips to the upside. So are we trending back all the way to this upside? That's what we're about to find out. Until the market switches on the daily to the downside for you, you are still uptrend. Don't try to say, okay, because it does an Elliott wave 1, 2, 3, 4, 5, it must do a correction. That's why I'm even recapping. If not, I am not supposed to recap, but as you can see on the daily time frame, what is the market doing? The market is trending perfectly well. And they said, well, the trend is your friend. So we take shots on this market. That's because we've seen that it's been trending perfectly well. We know our reversal level. So where are we right now? Focus. The most important thing in this business is focus and patience. Is focus and patience, because definitely you should know that according to your market structure and your, what's it called, aside from market structure itself, what do we do at VisionX? According to wherever we take liquidities like this or get equal highs, definitely we're going to come back and take those liquidity. And if we're really going to continue going and breaking to the downside, we will know from this area. That's why I'm even doing this analysis today, because it is very important that you must first of all, check the entire market and what it's doing. So this particular area we are right now is the difference between the upside and the downside. So if we fail to break whatever I'm going to explain right now, we're coming all the way down to 600 or 700 pips down to the downside back again. But if it continues, that means this market is continuing to the upside. So there are some important levels where you must understand as a market structure trader. There are some important levels where you, like the way I said, if we fail to uphold 1942 in gold, $1,942 in gold, we are going down to 1,800. That's the same way you look at your market. It's just structure. It's what's it called? At the end of the day, it's just structure. Look at your structures. Look at how it's trending. Don't try to trade against the trend. Don't try to go against your own rules. Are you getting it? That's why I'm even doing this right now, because this place is very important. I needed to get back to the PC to do this and help the community itself. So according to our strategy, what do we have? You can see that this market has been trending perfectly well from the downside, and we've been finding what support on this trend line. But I don't use these trend lines. I always use my structural levels to take my trades. I guess to take decisions. Now let's go into the trade properly after that much explanation. The trade properly is stating that this market is in an uptrend. If I bring in these two, this part 2, and just use it, you see that this market has been doing well, trending perfectly well to the upside. So this is where we are. Are you getting it? So after every break, what happens? Sorry, hold on. After every break of structure, what happens? We'll get a retracement back to our major areas of value. Then after every break, what happens? We'll get a retracement. So where that retracement is in, even when that retracement came in, we are supposed to do what? Wait for what? A reversal candlestick pattern or a reversal chart pattern before we take an entry. So if we could measure this with our Fibonacci retracement tools, this market reversed perfectly well back to not just a perfect 0.618 retracement, it also came back to what? a support and a preview, what's it called? It also came back to an area of value. And what is an area of value? An area of value is an area in which, support and resistance does what? Meet. An area in which support and resistance meet. So definitely, if this was a previous resistance that will broke to the upside and turn into support again, when the market is coming down, the manner in which it's using in coming down was very big. But when it got to this thing, it started slowing down before it got like how many days of consolidation. Definitely, you should know that the sellers were what? Exhausted already and trying to take a trade back. So these are kind of trades you're supposed to enter and put your stop loss below here, then take the trade next. So since we have that trade, we took this trade all the way to 7. Go and watch that video. We'll have analysis on these particular days. I think in the month of June. In the month of June, I don't know the particular day, I can't get it here exactly, but we took this trade in the month of June. I would said I would leave that trade to run to when? To have 0.786 Fibonacci retracement level. So if I should go back to probably, zone out and calculate for you, since we retrace from here, we are supposed to do what? Take your trade and put your stop loss to it, probably 100, 200 pip stop loss to it, and let that trade do what? Run, because this is how use your Fibonacci trend extension to measure where our target, our take profit is. And you can see perfectly well, it was a sniper, take profit at 700. So we left 64 pips out of it. We took the trade from 5885, 5885 all the way to 0.786 at 1.7080. So we're supposed to do what? Wait for a retracement back to this kind of, other block areas and, let it, give us a sign, a candlestick, sign language. And what was the sign language he gave us? A hammer at those areas. And when you're seeing this hammer happening at those areas, what is it telling you? It's telling you that this market is trending perfectly well and buyers are in those areas. So a hammer is a reversal candlestick pattern back to the upside. So after break of structure, we'll see what happened again. EURAUD is trending perfectly well. That's why I'm even talking about it and even looking at it. So we trace back to 0.786 and we are way back to the upside. But don't forget that EURAUD has done an Elliott wave 1, 2, 3, 4, 5 already. So you should be very, very worried about taking such trades, because this might just be a reversal backward, an ABC move back to the downside. Are you getting me? But because we have something called, now we have to look at all scenarios. The market gives you time to analyze and evaluate so that you don't make mistakes. The market gives you at least, I will usually tell my community, the market will not force you to enter trade. The market will at least give you at least 8 hours to, for 2 hourly candles, at least 8 hours to 2 days to make your decisions before taking a trade. Again, even though you must FOMO into any trade, at least you have to get a more confirmation. Now, this is one confirmation we've gotten already. This market is in a trend, which is uptrend from the downside since November 2022. But at the same time, the market has also done an Elliott wave 1, 2, 3, 4, 5 to the upside. Are you getting it? But that notwithstanding does not mean that you should not also look at, because this market is done Elliott wave, you should not also look at these particular areas, because right now I consider this as liquidity. So when we came back, found that trade, that entry conservatively, we know that definitely we're coming back to take all this liquidity. Now that we've taken this liquidity, are we continuing to the downside or we'll continue to the upside? Trust me, follow up. This place will tell you that particular question, as in the particular answer to that question. This particular area will tell you what it's about to do. So don't get carried away. Follow up. You should be able to analyze markets up to this extent before you get carried away. Now, the same thing I said on gold, why we are selling on gold from 1942 is about happening here right now. Look at. So if I should take all these things off first, let's analyze together again. Are you getting it? On the flip side, we had a previous support here, had on that support here. So what happened here? What happened here? If you can tell me. A lot of people call it what? Something happened here. When the market got to these particular zones, what happened? I guess when we got to these particular zones, what happened? We came back, took liquidity, we tried to come back, came back again. came back to these zones again. And we came back, and this was where I knew that we were going to break it because we didn't break above. We get into form and continue going. How, as a market structure trader, you should know about that already. So since we're not getting that, market will definitely would form a chart pattern. What chart pattern did it form? Formed a descending triangle. Definitely, the descending triangle is a reversal chart pattern, which if you had done a proper, you would have known that this is the face is coming to, this is the extension you are supposed to sell from. If you enter this trade aggressively or you enter conservatively, you would have taken this trade to complete the face of this what? Descending triangle. So we completed the face of that descending triangle. As a market structure trader, you took your sell all the way from 6650, 6640, and you took it to 66, what's it called? 6340 again. That's like 300 pips, descent triangle, extension to the downside. So after taking that trade, what next? That's when, yeah, that's what next. That's when you should know that definitely this market is now entering some zones whereby you should know, don't get carried away again, knowing that okay, if there's a reversal going to happen, what's the reversal you're expecting at on the daily? Remember, we got a hammer on the 4 hourly, we got a morning, what's it called, a morning star or whatever you might call it, or a bullish engulfing candle. Are you getting it? We've got a bullish engulfing candle on the 4 hourly chart. Are you getting it? So which is an extension back to this. So these are the kind of trades you can take and take some, as a day trader or as a swing trader, take the kind of 200 to 300 pips trade back to the next resistance because it was a previous resistance. So what now? That's a question. Overall, the market is extremely what? Bullish. Overall, on the overall structure, we are still in a bullish phase. So I was looking for what? A reversal pattern back to the upside, knowing that we're supposed to reverse on a sniper entry from 0.786 on this level, on this particular touch. So if you are not in a trade yet, what do? You're supposed to wait for this market to, show you a perfect reversal candlestick pattern, a perfect reversal candle, what's it called? Price action or chart pattern to take this trade. So if I should extend this, you can see that this was, if I should understand this properly, we're waiting for what? More touches. We had this touch, we had this touch, we had this touch, we had these previous 3 touches. So as it stands right now, what is the market showing you already as a price action, a chart pattern trader? Look at yeah, um yeah, an inverse head and what shoulders pattern was able to what form here. So an inverse head and shoulders pattern is a reversal candlestick. What's it called? A reversal price action or price action or chart pattern, which is to take this market back to the upside, which is we definitely do break a particular level. So I'm breaking all the entire market down into pieces for you to be able to use to analyze your other assets. So aside from that, I'm getting more confluences. I've been showing you more confluences. At the end of the day, it was not just what's it called, the same triangle that broke and got an extension back of the same triangle to the downside and also giving us a reversal candlestick pattern. What is also doing what switching and changing character back to the upside. What is the change of character we have here? This is the change of character we have here back to the upside. Aside from that, the change of character, how is it a change of character? That's because we did an ABC move back to the upside also. So just get all your confluences together, get all your facts together. Are you getting knowing that after doing that ABC move back to the upside, we are supposed to do what? Retrace just to 0.382. So you should not just base your analysis that, okay, we are broken above this support and resistance level. Are you getting it? If we break back into it, I'm supposed to start selling. No, you should have all your confluences together. What's the first confluences we have? We had the descending triangle, which we're looking at from number one. Are you getting it? Which is a bullish continuation pattern back to the upside after touching a particular resistance in what's called retracement level. That's number one. Number two, we have a switch, which is an inverse head and shoulder pattern, which is a confirmation of a bullish reversal back to the upside. Number three, we are breaking above. Are you getting it? A previous resistance now going to turn support because it was support before, so it's an important area of value. Number four, Don't get carried away. Remember that we have done a major 12, 1, 2, 3, 4, 5 to the upside, and we have taken liquidities also. Are you getting? So are we going down to the downside? This particular area will tell you that's number 4. Number five, which is the almighty of all them all, is what? A change of character back to the what? The upside. The market has to switch back to the upside for us. So that's number 5. And number 5 has happened right now. We're broken above a previous lower high already. Are you getting? That's number 5. Then number 6, 4 to 5 confluences are enough. Number 6, we just want this market to do what? Switch back to the upside. But if you check this very well, this was the last result where the market got exhausted. But since then, the market refused doing what? Switching, continuing this trade, what's it called? This trend to the downside. Since it stopped to the downside, that's number 6. Number 7, the market, instead of continuing this trend, it was on the 4-hourly time frame to the downside. It has been able to do what? Switch back to the upside. Breaking, that's number 7, right? Breaking above our almighty descending triangle. Are you getting it? That's a bullish continuation pattern to the upside. So what are we looking at right now as number 8? First of all, this trade should continue trending to the upside. Are you getting it? So if you don't want to take an aggressive entry, you're supposed to wait for this market to do what? Reverse back to our Fibonacci retracement levels of 0.5 or 0.382, or you can enter aggressively if you have a 250 pips stop loss to the downside, because this market is not supposed to do what? Reverse back to and break below 0.786 according to as a market structure trader. This market might come back and kiss, but should not break above it and should not break back into this bearish trend line that has broken to the upside. So that is very important. You must look at your markets like this. We should definitely know what to do and how to make such decisions when you are trading the financial market. These rules apply to all assets in the entire market space. If you watch and look at your market like this, that's why they say, okay, focus on just one asset. Why I'm not focusing on just one asset or trading just one asset is I'm looking for A+ setups in those other assets. Once I get them, why should I leave them to run when I have enough capital to take those trades? It's just when you don't have enough capital or you don't know what risk and money management is. I know that I've taken just probably 2 or to 5% or 10% of my capital to take gold, to take EURUSD, probably another asset. I might still poke into, maybe take more, what's it called? Maybe I have 100%, I've taken 10% already, and I'm getting a very, very good 500 pips to 600 pips trade on these EURAUD to the upside. I can still take at least 5% from that trade to enter. It's my decision to take 15% more on my account. That's no problem. Are you getting it? Because I will still have more opportunities to take. I still have about 85% if I take 5% more to enter this UAE trade. So depends on how you calculate your risk. You have already accepted your loss that, okay, my total account size, I'm willing to lose about 10, 20 or 15, 10 to 15%. You can take that loss already. If it goes well, no problem. If it does not go well, when you wake up tomorrow, when you wake up next week, when you wake up next month, market will always give you an opportunity to take trades. That's why we always do what? Wait for A+ setups and calculate our risk to it and enter this trade. So I'm using 5% of my account size on this trade already. Are you getting it? I'm taking 5%. So I've gotten enough confluences to tell me that I should take a buy on this trade. So my decision right now will be buying from these areas, are you getting it, and taking it to the next retracement level. And what is the next retracement level? Let's go back to the daily time frame to find where this market might be doing what extending to. So we know already that we've gotten a retracement back to 0.618, and it has given us an hammer, and it has also given us another short pattern right now. First of all, look for candlestick pattern. Then secondly, look for what? A bullish chart pattern, a bullish price action pattern, which is the head and shoulders pattern, and not just a head and shoulders pattern. Then the next confirmation I have is that this is bullish for me to enter because it bullishly came and broke above. So as long as we're not breaking below this, I say as long as we're not covering, bringing a bearish, what's it called? a sharp pattern that will engulf this and turn to a bearish engulfing candle to continue this trade to the downside, I am still in this trade because this is my last resort. Look at it now. So the market is always showing you, the market will always show you for this to turn to a bearish market. Are you getting it? This next today's candle needs to close below this to form what? A bearish what? Sharp pattern. A bearish what? Sharp pattern. And the bearish sharp pattern we're talking about is a bearish what? Um, a bearish candlestick pattern, which is a bearish engulfing pattern. So the moment this candle is closing today below 1.6550, that means that we are what? Actually cashing what? A bearish vibe to the downside. And what is that bearish vibe? If I can remove this, that means that the market is what? Retracing back to 0.5 retracement tools. I guess look at it now. So the moment this candle is unable to break above 0.5 and closing today above 0.5, I get that's on that sign again that this market wants to switch back to the downside. And this was actually a change of character back to the downside. Sorry, it was actually a change of character back to the downside for the market to retrace to 0.5 and continue slow as in going to the downside. So you don't have to rule out the bearish case scenario also. But in some situations like this, the market does what? Either form an evening star or probably form a doji today, which is Friday. Are you getting it? Form a doji here today, which is what you're seeing right now. But today is not closed yet. We have about 10 hours to go. Forming a doji, then coming in on Monday to form a bearish case, as in, what's it called? An evening star. Are you getting it? To take this market to what? To the downside. So what you should look out for, three things. Now we've gotten 8 confirmations. I'm giving you more than on that confirmations how to take decisions or make decisions in the market. We are 0.5, 0.618 kills on. Today is Friday. I don't expect much movement in the market, but that does not mean that I should get carried away with my overall trend. The overall trend is bullish. The trend is my friend until otherwise proven wrong. Are you getting me? So this is the reason why we might get a doji here today, but anything that is making my candle close above 0.5 Fibonacci retracement tools on the bearish case scenario, and today is closing as a doji, I'm not to be worried. But it giving me what's it called, an evening star on Monday, I will know that definitely this market is about doing what? Going to the downside. But overall, what do you do in your market? You take risk. The market is nobody, don't let anybody give you an holy grail that, oh, you're not supposed to lose money in the market. You're supposed to lose money in the market. That's why I'm even putting what? A 250 pips to it. So my trade still remains what? My sentiment still remains what? Bullish. So I'll not let the bearish case scenario stop me from taking trades when I'm getting a bullish vibe and also in a bullish market, which is a bullish trend. I get it. So conclusively, this is my trade setup. Entry from these areas, or I've entered already. Are you getting it? And I have a trade already from these areas already from 6,400. I think is it 6,400 or this? I think 6,400 after getting this doji on the 29th of September, which is about 13 days ago or 14 days ago. Are you getting it? So I am in this trade already. If I'm taking more entries right now, I'm taking this entry from here, and my stop loss is below here. Let me say my stop loss is 250 pips to the downside. I would have used ATRO, but there's no point. We've gotten more than 10 conferences already where we've done to our best of our knowledge, we've taken this trade. So where are we taking it to? That's where the last target. The target is now will be from here to here. Then put my extension here. My target, the first take profit is 7070. 1.7070. That's about maybe from here. My first take profit, then my second take profit is here. So here is my first take profit. Then my second take profit. At 7. I know it's up to like maybe 70 pips more, but I'll take 700, 7200. I get it. We still have about 79 or 80 pips to the I'll take 700. I'm not greedy. So here now, take this one, I'll remove 70 something pips again from here and take it at 700, 1.700. So I get in removing those 76 pips. I've removed 76 pips from this, I removed 79 pips from this. So this is my trade setup and my, how, sorry, this is my trade setup and how I look at the market. I get me generally. So if you have all these things and the way you analyze, see, just imagine the way I've broken the market down from the lower time frame, even thinking about the bearish case scenario, the bullish case scenario. I get me thinking about the entire structure itself. I get me analyzing the entire structure itself, knowing that this was liquidity that definitely won't get here. The market might just reverse back to an important area of value, will come to take liquidity. Are you getting it before coming down? And this market, even though if it was even supposed to come down, we are not even supposed to reverse it an inverse head and shoulders pattern. We're supposed to just do what? Hold on, I'm coming. We are supposed to just do what? Come to this part, even though we are doing a head and shoulders pattern, the head and shoulders pattern is not even supposed to do what? Break like this and give us a green, a break above or a change of character back to the upside. The market was just supposed to come back to these areas now, what's it called? A bearish shooting star. Are you getting a shooting star should happen around this place and what continue this market back to the downside. But since it's not doing that, it's switching back to the upside, you should know that this market is what? Bullish. Breaking above a previous support and resistance zone. Are you getting it? Breaking above a previous support and resistance zone. Now, what is it trying to do? It's just trying to find, a support around here again and continue trading to the upside. So I believe I'm talking too much. Let me just close this chart. Let me just close this. So these are my trades. This is my trade setup. So I'll bring in my last what? Sorry. I'll bring in my last two. And what's the last two? My trade. So I'm entering this trade right now. My first take profit, my second take profit, my stop loss is at 250 pips to the downside. So I don't care, but I'm just trying to be, because today is Friday and a manipulative day. Let me set these guys to go. So my stop loss is at 2-0. Or let me just 0-0. Calculate my risk to it. So this is 2.7 risk to reward. You getting it? Knowing that we are not even supposed to break below this again. When we are breaking below this, are you getting it? Breaking below this market has done what? Change character to the downside, to trend to the downside. So this is my bullish case scenario. If there's any bearish case scenario, even though we take a loss of 250 pips, we will recover it. We break structure to the downside again. Are you getting it? Then find an entry from this area and recover. The market will always give you an open window to enter and recover. So be on your lower time frames right now after taking this trade. Probably on your own 1 hour time frame, just or 1 hour, 2 hours, 4 hours, anyone, just be on any of your time frame. What are you looking at? Make sure that you're looking for what? An entry, or you're entering aggressively right now. Looking for an entry back to 0.5 because this is move 0.5 broke structure again. So we are waiting for a retracement before continuing what to the upside. This is what you should endeavor to do. So definitely we can see let's reduce our entry probably back to these areas. No problem. We have entered some trades already. I don't want any situation that this support turning into resistance right now. I guess this resistance turning into support right now will not catch us off guard because most of the times it's just bouncing back of this major support and continuing this bullish vibe to the upside. So this is my bullish case scenario. If any bullish case scenario is coming, we're taking that loss, no problem. We enter back by that's what we use. That's why the market gives us what's called CMDs. So your last resort is at this bottom. We cannot break back into this bearish pressure trend line that has broken to the upside already. So this is what I have for you today. Take care and bye for now. Any further questions, you know where to reach out at our Telegram channel. You can reach me privately if you have my private contact. Take care and bye for now. Bye, 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 bye.